All right, guys, I'm back again. Let's just do a quick debrief of what just happened. We just had some really big data coming out of the US, which kind of confirms what's happening globally, where inflation is just pushing to the upper envelope of the outer envelope of what the banks find. It's much higher. In fact, the banks are really starting to worry about inflation, and the numbers that are coming out are just not abating. So we are looking at a CPI which just came in at 8.6. The extreme estimate from most top institutional analysts was 8.4. And I think we were looking for a number 8.3, came out 8.6, and all the other aligning data regarding inflation that just came out has been a huge beat. We've got month on month at 1%, expected 0.7. These are huge numbers, guys, really big. And given what happened yesterday with the CPI, we've had a reaction to the downside in all of the equity complex, including Europe. The bonds are what's really, I said that in my stream. Just not long ago, I did a live CPI stream. In my stream, what you want to be watching is you want to be watching the bond yields, and you want to be looking for things that are going to are very sensitive to rates, which in this case is the Nasdaq. Nasdaq is probably the most sensitive equity index, most sensitive one. So keep your eye on that one. I'm not going to trade today. I'm just not. There's the roll also, which is taking place as well. So I'm quite happy to leave it as is. We might quite easily just reverse all the way back up again. It's the roll. It's so unpredictable. Price action is really difficult to read. You saw that on the open yesterday, where we were really choppy. You saw a lot of two-way action on the open. So I'm not going to trade it today. I've had a tough week, like sleep-wise. I've had a tough week, but also I've had a good week trading performance-wise, and doing it on top of everything else has been, it's just made me really happy. So I'm going to just leave on the nice high note. It's really sunny outside, so that's where I'm going. But let's just quickly have a look at what happened during that CPI. It's really hard to sort of say, guys, this is what's happening today. All my notes from yesterday have gone out the window. So I didn't do an overnight update because it's pointless to do one with such a big piece of data coming out. It's just not worth. I mean, obviously, what you want to do is you want to trade and prepare for the event, and you need to sort of you need to manage basically what's happening in real time. This is where being a trader and having experience really helps. So we had this bigger. These are my notes from yesterday. Just throw them out the window. We've just got a continuation of this liquidation lower. Sellers are trying to meet buyers. Buyers are trying to buyers just not being found. They were, we had a little pocket yesterday, overnight yesterday and into this morning, where we were holding above the 4,000 into 28, which was this this little spike. You can't see it. Okay, hang on 1 second. There it is. So I'm just looking at my debrief. It's easy to look at. Okay, so look. So that's where we're kind of looking to be contained, and we slice straight through it. And we were saying just before that these were the areas that we're looking to go, and we're just slicing through them. I mean, nothing is holding these little high volume nodes, where we've previously done a lot of business. It's just not happening, guys. We are starting to price in recessions here. We've got rising rates into. Sorry, I've got a bee in my bedroom, which is. I'm going to be brave. Okay, I'm going to set a good example. All right, sorry. If it goes in my ear, it's going to be really annoying. Anyway, so we've got this repricing of the S&P and all equities, given the fact that we've got extremely high inflation, we've got growing worries about slowdowns in growth, we've got the war, we've got we've got China that just said they've got no issue going to war with anybody if people try to stop if people try to make Taiwan independent or allow for that. Sorry, I completely muddled my words. You see, I'm tired. That's one of the reasons I didn't want to trade CPI. But basically, we've got all this stuff going on, and the market is just, it hates uncertainty, right? And now the theme is inflation, inflation, inflation. And after yesterday's ECB and the huge jump in yields in the Italian bonds, you know, you're starting to see that, you know, like peripheral spreads now are going to start breaking out. And just remember what happened in the GFC, the great financial crisis. You know, it started off with a housing problem, but then it turned out into a peripheral debt problem. So if interest rates go to 5 or 6%, I just don't know how. Okay, maybe we won't go to 5 or 6% and stuff. I don't think that's going to happen just yet. But if yields start rising, Germany has just spent the last 10 years basically getting paid to borrow money. So anyway, I'm not going to talk about economics too much and stuff, but read about it, try to understand what's going on. Context is everything, and you know, understanding what's driving this market is super, super important. A friend of mine once told me the market is simple. It can only think about one thing at one time. It's either the Ukraine war or you know, at this point in time, it's inflation. We don't care about anything else. I think Kiev could get bombed over weekend and we'd barely move. It's all about inflation. Okay, it's all about inflation at the moment until the theme changes. If it's coronavirus or whatever, it's just one theme. The market is simple. I think he said the market's dumb. Okay, I'm not calling anybody who's participating in the market dumb, but it's just so binary. The market is, that's the beauty of it. It's just up or down. It's binary. It's on or off. Okay, that's all you need to know. And so what we've seen here, we've just seen like this massive repricing of risk. We're coming down to these key levels at 32. They're so far away. I just didn't prepare for, you know, these levels down here overnight. We are really moving. So spike rules apply today, but anything can happen off the open. We've got, in fact, I'm just going to carry on this stream. I'm not going to start it again for a new live session. I'm going to keep this and then edit it out later on, because there's no point. I want to keep talking about this. That is my overnight debrief. It's just so not worth talking about. What's really good, guys, if you just look at some of the trades that I took yesterday, I had one of my best trades ever as a discretionary trader, where you know, this was an area that I was really looking at for the last week, and just counting the days. If you have a look at my notes, 1 day of balance, 2 days of balance, 3 days of balance, 4 days, 5, 6, 7, 8. You know, I was amazed at how balanced this was, and it was all leading into the CPIs and ECBs. I think what a lot of traders failed to sort of, especially US traders, is I don't think they realized the magnitude of what was going on in Europe, and most of them were still sleeping or coming into work. So a lot of the events that happened going into the market were really important to yesterday's breakout. I think we had this, you know, these huge moves in yields, risk off in equities, risk off, or, you know, repricing of risk. And I think, you know, just understanding that European what's going on in Europe can also influence what's happening to US equities and stuff. Remember, just only a few days ago, we had the Bank of Australia, the Royal Bank of Australia, surprising with a bigger hike than expected, and you know, we had a big move in global yields just because it surprised. You know, we're starting to worry about big surprise. The ECB yesterday said that they're talking about a 50 basis point move. It's really important to understand that we are in unknown territory. I don't know. I mean, I don't remember the last time I traded a rate hike. It was 11 years ago. I didn't journal like I do now. I have no idea. I know that the markets were extremely volatile when it was, you know, when that was happening. You know, in the GFC, there were lots of opportunities again, but I've not experienced this for a long time. So this is, I'm kind of running with this. I'm trying to use a little bit of what I remember, but yeah, this is unknown territory for the market, and a lot of participants as well. A lot of participants are new. There we go. We're off on the open. Okay, I won't talk about the debrief too much. That's not really what I want to be doing now. I want to be looking at what's going on. Can we find buyers? Overnight inventory is massively short. We want to see an instant reaction. Remember, we want to see an instant reaction. If they don't, if longs fail to get in, if buyers fail to turn up on the open here, we could be looking at some really nasty stuff going into the weekend. Okay, we are looking. What are we doing? What are we doing? We've seen some big bubbles buying. We've seen not too much business being done here. The market's unsure. It's just a continuation that's been happening before from the CPI. But we want to see buyers step in now. We need to see some reaction here. We need to see some willingness to support this market. Otherwise, I really think we could have a really nasty Friday. These markets are starting to, you know, look at where yields are going. They are moving massively lower, guys. Rates are rising. Nasdaq is down at the moment 2%. That's the most sensitive to stocks. To yields. All right, we're seeing some kind of attempt. What I like to look at going into the open is the pre-open swing high. So the last 20-30 minutes, where are the localized highs and lows. So here in this case it's about 60, lows of 40. So a break above there shows me change. A break below shows me continuation. So I am looking for change. I am trading balance. Check out my balance trading rules. They're all out there for you guys to try to use as guidelines. Nothing but guidelines, guys. Everything I say is my trading style, okay? And I need to do a seminar about how I struggled when I made the move from a systematic approach and trading spreads. There we go, just breaking that little high there, but we're finding sellers again. We're finding sellers. I think there's nothing worse than running contrary, exactly what it is. So I'll just tell you a little story if you are interested. I spent, you know, 14 years on one of the best trading floors in maybe in the world. You know, these guys are like top guys. You know, they're like 7-figure traders, right? And most of them are my friends. And I was trying to learn from my friends and the people on the floor, and I was looking for answers. And I think my ego just didn't allow me. No, not my ego. Initially, I think my ego didn't allow me to accept that it would take a long learning process to learn to trade discretionary. Yeah, so it was my ego. You know, I thought that I would be able to. You know, I've traded markets. I know how to use these tools. I know how to use footprint. I know how to use market profile and stuff. But you know, when I was told that it would take a year or two, in fact. A year is what I was thinking in my head, but what I was told was 2. You know, once I saw myself not performing the way I expected myself, because I had these huge expectations on myself, then that's when the disappointment set in, and eventually I stopped actually. But it was because I was looking for answers from other people, and I didn't give myself the time that I needed to learn this new style of trading. Okay, and what it took to sort of acknowledge that was me to step away. And sometimes if you've been struggling for a while, it's good to step away. Watch these lows. This is really something. This is just so weak, guys. This is so weak. The S&P, just watch this. We need to hold this. We're seeing some absorption here. Boom, big order there. You know, if I would be looking to trade this, guys, but I'm just taking a day off today. And I'm just staying for the open, and then I'm going to leave. We're seeing Delta carrying off, really strong Delta into the open. Look, let me just get this up. Look at the Delta there. Look at volume, it's increasing. This is showing me signs of continuation. Volume's increasing, Delta's going down aggressively as well. Buyers aren't able to support this market, or sellers aren't able to find liquidity that they need to fill their desired allocations. And it's Friday. We can have huge moves. Anyway, so going back, I didn't allow myself the time I needed to learn these new skills. I learned a lot, but I really was looking for answers from everybody else, but everybody else had their own style of trading. You know, there's the, won't mention names, but there was... Everyone had their own stats. Some were great news traders. Some were great, you know, technical analysts. And I was trying to learn from all of them and put something together myself, and it didn't work. So my advice is just use whatever I say to you as guidelines. Here we go. We just touched 32, which is an area we found. Look, you see how we found a little bit of liquidity down here at 32, which is an area that we've marked out. It might not hold. I don't think it's going to hold. Guys, this is something important if you are watching, and nobody is, I know that, so that's fine. It's post ECB, right? So just... We won't come back to the past policy rates. ECB synthesis that we should implement orderly and gradual policy. They're all coming out, all the ECB guys are coming out. Listen to this, guys.
Also, so that's the summary for ECB synthesis comments had a panel discussion in Poland. So the key thing that we should implement orderly and gradual policy and won't come back to past
all right,
policy
we
rates.
get it. Okay, stop talking. Okay, so just going back, it's post ECB. So one of the things I'm just so aware, clued into, is just any kind of comments from the ECB as they come to either take back the moves that have happened, but they're not. The ECB are coming in actually and reinforcing what Lagarde said yesterday, is that we might have 25 or 50 basis points in September, and end of purchases end of this month. So this is basically just driving yields down, and we're seeing these huge moves. Even though that we had this hawkish ECB yesterday, we're seeing
the White House also announces Friday that the administration will no longer require pre-departure COVID testing for international air travelers effective June
we're seeing
12th,
the euro. I'm going to stop here
according
now.
to
Stop
an
talking, please.
administration official.
We're seeing the euro continue its march down. It's it didn't find its feet yesterday. You noticed that what the market's worrying about here is the fact that the ECB are looking to hike into a weakening economy, and that's just gonna that's got its own problems. We're trying to hold on to. This is an area here, guys, that we've this is an area of interest. We've moved 70 points. We're down almost 2% from the open. Not from the open, from the data where we're trading at 14.15. We're down about 80 points. These are huge moves, absolutely huge, monster moves. I have to recognize also that these I don't like it when it's like this. I mean, at the moment I could be taking trades here. I'll be looking maybe 46 for continuation, but I'm not doing that today. This little low volume area here is very interesting for me. That's an area I'll be normally looking to trade, but it's not even getting up there. It's getting up to the edge of this little profile. Remember, we're trading balance. When we're trading balance, we like to trade the edges. We like to trade areas where price is being rejected, and where can we see that price is being rejected? Where we've got no volume being done, and this is a little cave, and this is why those caves and profiles are really important to me. Now, also notice this: we've got this big ledge of volume trying to hold on to these lows at 32. Okay, and why 32? Well, we've marked it out on my prep sheet. So it's all about being prepared. To be honest, I was prepared for the week, for the break of the 8-day balance, and luckily, outcome agnostic. Yesterday's trade was great. I took it, but I had no idea that this was going what happened yesterday. It was a big move. I managed to get on it. Great. But that's basically what I've been preparing for the whole week, and managed to get on it. So, it can take 7 days of just patience to catch one big winner. But that one big winner, it's come from attrition, just sitting there, just waiting it out. I mean, of course, I've traded the other days, but they were average days, But yesterday was a big day. We had the ECB in the morning as well. I did really well on that as well, trading my proxies. Anyway, I've really been speaking too much. I'm going to step away, go and get a fresh cup of tea. But again, nobody's watching this, but what I want to be doing here on these streams and trying to do is the only way you guys are going to learn how to trade. And if you're really dedicated, I want you to join me. I want you to join me on the Balanced Trader. You know why? Because I'm trying to create a virtual trading floor. Okay, let me guide you, let me help you, let me sort of outline some guidance on how to attack these markets. Okay, I've learned from some top guys all around the world, and I just keep learning. I follow multiple people on Twitter, but ultimately I'm doing my own thing, and that's what you need to do. But what I'm trying to do is I'm trying to get you to watch me and learn in real time, and no one else is really doing that. Okay, I'm going to teach you in real time how to tackle these markets. Okay, and when to pull back, when to trade, what to expect, how to prepare. I haven't been doing that, but that's something I need to be doing. But I'm not going to be doing it on YouTube. But if you join and subscribe and join my little gang, I will be prepping you guys up for all the biggest trading events, and we might even trade something other than the ES. But the other thing is, if you're new to trading, just stick to one tool, one trade, one or two tools. Get rid of all the indicators on your charts. Please get rid of them. Right, I'm talking too much again. I love to talk. All right. Okay, that's enough for now. I'm going to step away. I'll leave you to it. Okay, we bounced off those 32s, an area that we pre-designated as an area of interest. Okay, what we're looking for is just clues. We're looking for, but we've done our prep. We know where we're looking, okay? And also, where did that, there was a huge impulse off the data today. And where did it stop? It stopped bang on 72. It bounced for about 10 points, and then it came back down again. Where did it bounce? It bounced into this area of lower volume, area where price is being rejected or not traded as often. Okay. Oh my God, I'm burping again. Sorry. Yeah. Anyway, I'll leave you with that. I'm going to try and head off. I wish you all the best. I wish you all a great weekend. I hope that you learn from following me. I hope that I draw in some of you. What I'm really looking for is, I'm not looking for a mass crowd. I'll be honest with you. I'm not looking for a mass crowd. I'm looking for people who really understand that this is not a get-rich-quick scheme. That's something that, I can't tolerate. People who think they're going to come in and start trading and making it on the first day. That's just not going to happen. Yeah, it takes a lot of hard work, and I'm not saying it's impossible, but it's going to take a lot of hard work, and you're competing against some of the best algos, traders. It's amazing. It's such a great arena to be involved in. It's a privilege, and that privilege doesn't come lightly. It's like anything. If you want to be the best, if you want to trade against the best, if you want to make money, if you want to be involved in this, you really need to take this seriously, guys. And it all starts with just journaling and taking notes, keeping statistics, looking back on things, trying to remember little things that have been happening. Yeah, I can only offer that as advice. Anybody who thinks that this is going to be some kind of way to get themselves out of debt, or anything else for that matter, it's just it's a recipe for disaster. And desperation is, you need to be able to give yourself the time to learn to do this. And if it's part-time, fine, but you've got to be consistent. Even if you're part-time, you've got to be consistent. If you're not going to be able to do that, then I think this is not really, day trading is not your job. Maybe participating in the market in some way, taking longer term investments, having bigger, wider stops, but trying to get in for 2 ticks of risk to take 50 or 40 or whatever it is, like I did yesterday, this is just, that's a skill, and there's so many things you need to sort of learn before you get to that stage, and it will take you. It took me 9 months to start trading and making money when I was a spread trader, but that compared to discretionary trading is a lot easier. And if you want to learn how to trade spreads, I can give you some pointers. I did that for 15, 16 years. All right, I'm gonna leave it at that, and have a good weekend, guys. Big respect to all of you for watching, and please subscribe. I'm here for you if you want anything answered. If you want any, if you have any suggestions for my stream, my blog, my Twitter, anything, just hit me with it. I need some feedback as well, and hopefully I'll start getting that. I'm already getting some back. So yeah, thanks for watching, guys. I'm going to keep this running, but probably cut it short because there's no point in watching this. No, you're probably watching your own screens, and I won't be talking over it. So that's it, guys. Have a good weekend, and thank you very much for watching. Okay, thanks. Bye.